we work with a lot of people who kind of enter this new phase of life where the hardest thing to wrap your mind around sometimes is understanding the change in your tax situation. You know, a lot of people, they're making the best money that they've ever made in their lives right before they stop working. And a lot of times they're in the highest tax brackets that they've ever been in. And then when you stop working and you start living off of your portfolio, it's not uncommon for those individuals to fall to much lower tax rates than they've been subject to in a very long time. If you've got a large taxable investment account that you're able to live off of, it's not uncommon for us to see uh, clients or individuals with significant wealth who are now in some of the lowest tax brackets. And the other part of that is a lot of those people have done a really good job of saving, but if they've saved, I'll say too much into the pre-tax retirement bucket where money that's taken out down the road will be subject to income taxes. When we project out what their required minimum distributions are going to be, which is essentially the IRS, when you turn between 73 and 75, forces you to take money out of your IRA or 401k account when you reach that age. And a lot of times for those individuals, they can be forced up into much higher tax brackets than they would have otherwise found themselves in based off of their lifestyle. And so we call this the retirement tax planning window, where somebody goes from a high income down to a very low tax bracket, but we know in the future they're going to get pumped up back into higher tax brackets. And the biggest mistake is not taking advantage of that.